Good afternoon and welcome to the Market Matters weekly video update. I'm Harry Watt, joined by James Gerrish. We're going to talk about reporting season again this week, James. It's still, plenty going on in terms of companies reporting every day. There's dozens out today. There's a lot out tomorrow as well, in particular. James, Thursday's a big reporting day this week. What's your take on what's been good about this reporting period, James?
Yeah, I think generally it's been strong overall. I think I'm surprised by the confidence in companies to issue forward guidance. So that's been a positive. I think the big barometers of what the economy are doing, so when you look at the banks and resources companies and sort of industrial companies that are exposed to the Australian economic situation, they've done pretty well. So bigger picture, I think it's been solid. It's been overshadowed by what's playing out on the geopolitical front in terms of Ukraine and Russia. But a couple of reports that I'd sort of highlight: Hub24, HUB, investment platform business. We own the stock in our flagship growth portfolio. They did particularly well, and particularly well versus market expectations leading into it. So there was concern that these platform businesses were having issues with margins. Their competitors, Netwealth, and to a lesser degree Praemium, had those issues. Hub didn't. They also provided a strong upgrade in terms of funds under administration guidance. So that to me was a really strong result. Whitehaven Coal is another stock we have in the flagship growth portfolio. I characterise the result. There was a huge amount of volatility on the day of the result. They're not achieving the prices perhaps that many had thought they would in the first half, but the second half looks huge for Whitehaven. So they're two stocks that we really like their reports. We're long the stock, we're bullish the stock, and we continue to hold reasonable positions across both of those securities.
Definitely. In terms of the bad though, James, there's always a few misses every reporting period. What's disappointed you from a reporting perspective this period?
I think from a bigger picture context, or a sector context, I should say, the retailers have been tough. So it's the first time this reporting season I've seen Bunnings go backwards, for instance. So that's owned by Wesfarmers, obviously coming off a really strong period this time last year, but going backwards all the same. I thought that was a fairly weak result. And more broadly around the retail space, so Adairs, the online e-commerce companies have been weak. So they're really struggling around this concept of margin pressure is really coming to the fore. So one of the themes we've seen this reporting season is any company that misses in terms of the margins they're achieving has been hurt pretty significantly. So the retailers as a group, I think I'd highlight those as being the weaker ones. After a pretty good, they've had a really good time leading into it.
Yeah, definitely. What do you think's been misunderstood? What do you think went down on a good report, and what went up on a bad report, James?
I haven't seen any that have gone up on a bad report yet. Still time for that one, Harry. So, I mean, in our realm, the most obvious one was Altium. Obviously, it's software technology company hurt by rising bond yields that have hurt the whole technology high growth sector. But they came out and reported a result that was strong in terms of revenue. So they upgraded their revenue guidance, but they downgraded their margin guidance. So this focus that the market's got on margins, and it's right to have a focus on margins, but it's got to be in the context of what on an individual company basis. So Altium have got a really strong opportunity to tap into demand for their products. They're upscaling that with a greater sales team, and that's costing them money to do it. So that's what's been the issue around their margins. We own the stock. We've owned it from sort of the $26 mark in our flagship growth portfolio. We've gone in and added to that position today around the $31 mark this morning. So that's a stock that I thought the market misunderstood it. They sold it down. It was down 10-11% at the worst on the day that they reported. And I think that's an opportunity to buy a really high quality technology business that had takeover interest around the $40 not long ago from a large company that is very much ingrained in the Altium ecosystem. So we like that one.
Definitely. One thing that we've noticed in this reporting season, James, it might be a bit of a changing of the guard. The companies that have done well in the last couple of years are now sort of missing their mark a little bit, missing expectations. You mentioned retailers in particular. Is this sort of the change in the guard now? The COVID tailwinds that some companies got are no longer going to get that going forward.
Yeah, potentially. So I think that the most obvious thing is these high growth companies that have been the market darlings for a long time are now becoming market duds. I don't say that lightly. I don't say it because these companies are duds. I think the market's interpretation has changed pretty dramatically. I wouldn't necessarily get overly. I look at some of these high growth companies that are still growing really strongly that have been absolutely trolleyed in the last couple of weeks. The market is a really strange beast. It can move. The elastic band. We often write the elastic band stretches too far in either direction. Probably in hindsight, too far on the upside. And I think in some of these now, it's stretching too far on the downside. So, we've gone in, as I said, we've added to Altium, our position in Altium in the flagship growth portfolio today. I'd be more on the buy side of these high growth technology businesses in the short term. I think that elastic band has stretched too far. So our emerging companies portfolio has had a bit of a tough time, but I would go in and look at the stocks that are in that portfolio. There's a reason they're there. And it's important just to stand back and focus on why you're actually holding those businesses in the first place. So I think growth in the short term is going to bounce hard. If I look at our income portfolio, that's more of a value orientated portfolio. That's done particularly well in the last few months. I wouldn't be surprised to see some mean reversion between growth and value in the short term. So that would be the way I'd be playing or looking at those individual portfolios on the website.
Definitely. Thanks for joining us, James. Thanks for that. There's still plenty more to go through this reporting season. So look out for the afternoon reports and the morning reports on the Market Matters website for more detail on who's reporting next and how they've done.